A 52-year-old milkshake machine salesman writes a check that will change the world forever. Right now, Freddy's, Custard, and Arby's brands that survived over half a century are closing locations permanently. The same pattern destroyed thousands in the 1960s. One man discovered how to survive when others couldn't. His name was Ray Kroc, and his secret weapon was a cash-value life insurance policy that professionals use to protect income during volatility. Today, you'll discover exactly how he did it and how this strategy still works. Ray Kroc is 52, broke, and desperate. He spent decades selling milkshake machines, sleeping in his car between sales calls. His marriage is failing, his health deteriorating. Then he gets an unusual order. A small California restaurant wants 8 milkshake machines. He has to see this place. What he discovers is McDonald's, a revolutionary system with fast service and consistent quality. Ray sees what the McDonald brothers can't. This isn't just a restaurant, it's the future of America. Ray convinces the brothers to let him franchise their concept. He works 20-hour days, opening locations across the Midwest. But there's a catastrophic problem. The McDonald brothers take 0.5% of gross sales. Ray gets 1.4%. After costs, he's building an empire, but earning nothing. By 1961, he's opened over 200 locations. McDonald's is becoming a household name, and Ray Kroc is still broke. The brothers want out, demanding $2.7 million equivalent to $28 million today. Ray doesn't have $2,700. Every bank laughs him out. He's 59 years old, and the deal of the century is slipping away. But Ray had done something most entrepreneurs never do. Years earlier, even when money was tight, he maintained a cash-value life insurance policy. While others gambled on volatile investments, Ray built wealth in a vehicle with guaranteed growth and zero market risk. Now, that decision saves everything. Ray takes a loan against his policy's cash value. No credit check, no bank committee, no explaining his vision to skeptics. The money is his borrowed from himself, with interest flowing back to his own policy. He writes the check, $2.7 million. The McDonald brothers walk away. Ray Kroc, at 59, finally owns the empire he built. His policy had 3 shields banks couldn't offer. Shield 1. Market volatility-proof. The 1960s stock market was unpredictable with recessions in 61, 69, and 70. Ray's cash value grew steadily, contractually guaranteed, insulated from Wall Street chaos. Shield 2. Inflation-proof. As the dollar's purchasing power declined, his policy's death benefit and cash value increased, building wealth faster than inflation could erode it. Shield 3. Liquidity without permission. When banks said no and timing was everything, Ray had immediate capital access. No committees, no waiting, no explanations. Within 3 years, Ray turns McDonald's into a billion-dollar corporation. By 1965, it goes public. He reinvests aggressively while competitors grow slowly, dependent on bank approval. McDonald's becomes the most successful restaurant chain in history. Over 40,000 locations, serving 69 million people daily, recognized worldwide. And it started with a financial vehicle most dismiss as just insurance. Fast forward to today. Freddy's frozen custard is closing locations. Arby's is struggling. Red Lobster filed bankruptcy. TGI Fridays shuttered dozens of stores. Why? When economic volatility hits and credit tighten, businesses dependent on traditional financing collapse. The pattern Ray escaped in 1961 is destroying businesses today. The difference? Ray had a financial vehicle designed for volatility and uncertainty. Properly structured indexed universal life insurance works like Ray's policy, but better. Your money grows based on market index performance. When the S&P 500 rises, You participate in gains up to a cap, usually 10 to 12%. But when markets crash, your account value doesn't drop. Zero is your floor. The 2008 crash? Zero growth that year, but zero loss. Your neighbor in the market? Down 50%. Policy loans are tax-free. You pay interest to yourself. IUL has contractual guarantees. Your cash value cannot decrease due to market performance. Insurance companies hold massive reserves and have survived every depression and crash for 150 years. Need $50,000 for opportunity? Take a policy loan, no credit check, no income verification, available in 48 to 72 hours. Ray Kroc died in 1984 worth $600 million, but his wealth wasn't the victory. His choice was. At 52, he could have given up. At 59, when banks rejected him, he could have walked away. Instead, he'd made a decision that seemed boring and wasteful to others. He paid premiums when money was tight. That unsexy financial decision gave him the weapon he needed when opportunity knocked. The wealthy don't get rich taking massive risks. They eliminate risk everywhere possible, then act decisively when opportunity appears. Ray created a personal banking system that couldn't fail, then used it to build an empire that couldn't fall. Businesses closing today aren't failing because of bad products. When economic stress hits, they have no private capital reserve. They depend on banks that panic, investors who flee, credit markets that freeze. You're watching the same pattern from Ray's era, and you have the same opportunity. Build a financial vehicle that works when everything else fails. Right now, you have a choice. Keep your money where 90% of people keep it in volatile markets, hoping the next crash doesn't destroy you. Or do what Ray did. Build a personal financial fortress. A properly structured IUL isn't gambling. It's contractual guarantees plus market upside without market downside. When the next recession hits, you'll have two options: panic like everyone else, or act like Ray Kroc. The question is, when volatility arrives, will you be the McDonald brothers selling your future for cash, or Ray Kroc with a check already written? Ray didn't figure this out alone. He had advisors who understood these strategies. The difference between empire builders and sideline watchers often comes down to one conversation that changes everything. At Shield and Scepter Capital, we're licensed financial advisors specializing in helping people discover which tools fit their unique situation. Not everyone needs an IUL. Not everyone should follow Ray's exact blueprint. But everyone deserves to know what options exist beyond what banks and Wall Street are selling. We offer free strategy calls, no pressure, just honest assessment of what might work for you. Maybe it's a IUL, maybe something else. The goal is ensuring when your $2.7 million opportunity appears, you're not wishing you'd prepared differently. Book a free strategy call with Shield and Scepter Capital today. Let's assess what tools make sense for your goals and vision. The next great American success story might be yours if you build the right foundation first.